Well, David, man, thanks for joining us. And looking forward to talking to you because I don't know a ton about Gridmatic, so I'm going to want to definitely know about that. But yeah, thank you for volunteering to be the guinea pig on our first really remote episode. So thank you again.
Yeah, thanks for having me. I hope this will be the first of your great success of remote podcasts, broadening your network. I've listened to a number of your in-person ones, and you guys have, the studio looks fun, so I feel like I'm missing out a little bit. But
I,
having said that,
I agree. I agree. I think it is fun. It is fun. So we'll have to get you back. Are you coming in for Empower?
I'm not going to be there for Power, but we have a Houston office actually. We have an office on Fannin Street, and so I do come into Houston from time to time. And
Okay.
yeah, I'll be around. So I'm happy to just give you some background on Gridmatic. We could dive right in.
Let's hear it. Yeah, what's the high level pitch? What are you guys working on?
Yeah, so we are an AI enabled power marketing company. We don't own any power plants, but we transact and contract in wholesale power markets and deliver services to customers. And those customers include folks like battery operators on the grid, big batteries for the grid, and then flexible load customers. And obviously, Bitcoin is the most exciting segment in flexible load customer world these days, and so that's where we spend some of our time. As background on the company, the founder and CEO Matt, he spent over a decade at Google as a software engineer. So he's a real technical founder. He was working on big AI and machine learning models, and he was on the ads team, which is actually the first place Google deployed those big models at scale before we got all of the language models and that sort of thing. And he got interested in energy there and worked on the Google energy team. He was connecting EV chargers at Google's campus to try to get them connected to the CAISO wholesale market, got interested in wholesale electricity markets. And then from there, he left Google to kind of build his own AI models, which is what he knew how to do, and use them to predict supply and demand and prices in wholesale electricity markets. Because he kind of saw that, like, there's a lot of change happening in wholesale electricity markets, all these renewables coming in, and that the wholesale markets were going to be where either the flexibility worked or didn't work. And he had this, this hammer of these AI-based models and a new technology approach to kind of understand how that was going to work, how prices were going to have, and apply that to building the flexible devices of the future so that integration could work on the grid.
That is super interesting. So, can you walk through what that entails then for a miner? If I'm like, hey, okay, I want to get some cheap power and I'm going to use this Gridmatic group. How are you guys interfacing with them? And like, what is the role you guys are actually playing for them on a day-to-day basis? Probably 5-minute increments, I guess.
Yeah, so it's evolved over time. Today we're a retailer, so we provide wholesale power along with additional services to these miners. I mean, at first it was just Matt was by himself building these models for a couple years. It really in his parents' pool house, so it was kind of a back of the garage story, coding away, getting into work for a couple years, and then it worked. And so he started trading financially in electricity markets, trading in day-ahead energy market and CAISO. And then today, we're now a 35-person company, and we trade in all the markets. And we operate storage, and we have a small retail business, and that's serving commercial industrial customers. Today, it's only in Texas, and so we're looking to expand from there. But we're working with in Texas, and so we'll go to a Bitcoin mining company in Texas, and we'll say, look, we can be your retailer, so we can provide you your power, which you need to get anyway. And then on top of that, we can do additional services. So we can offer you kind of the range of retail power contracts that Bitcoin miners are interested in. And then we can also help you make additional money through demand response. We're not a demand response provider ourselves, but we partner with demand response providers. And what we found is that there's kind of a disconnect between the energy provider and demand response provider. And if we can link those two things up together, we can kind of coordinate and provide the best outcome for the Bitcoin miner, and we play a role in the demand response component of that.
Okay. The fact that you guys are kind of remote AI players, does it allow you to kind of, like, I'm assuming your model has some type of adder on it for a per kilowatt hour fee? Is that, or what's the pay structure, I guess, for a miner to work with you guys?
Yeah, so I mean, as a retailer, we're offering to supply them with their full power needs at the meter. So that's the energy ancillary services. In Texas, it includes the utility charges come through us. So we are the where your bill's coming from, and so that model can vary. On one end of the
Mhm.
spectrum, you have the fixed price contracts. So, people just want to have price certainty, and we can give that
Mhm.
over, a year or multi-year period. And then on the kind of other end of the spectrum, you have what are known as index contracts, where the customer is exposed to the real-time price of power, and we just pass that through to them.
Mhm.
And there's some flavors in between too, which we offer,
Mhm.
but those types of contracts appeal to different folks. A lot of times the hosts need a fixed price contract because they need to provide that price
Mhm.
certainty to their customers, whereas the more integrated mining companies might be more interested in an index rate where they can kind of decide how they want to
Mhm.
curtail or not curtail based on market conditions.
Yeah. Um, and this is something that's kind not off topic, but I'm curious because I ran into a group that had one of these stipulated power contracts in Texas. It was like a 10-year term. Do you see any of those anymore? This one's a few years old, but there's still some term left on it. But I had not seen anything like that in Texas, especially at the rate they had. But are you seeing any of that in the markets
It's
here?
not super common, not in
Right.
Texas or in other markets, to have a 10-year
Mhm.
contract. They do exist. I mean,
Mhm.
it's not like it's impossible. It's a free market, and you can do them. But for the most part, most of the contracts that we see are in the range of 1 to 4 years. Um,
Mhm.
I think that's changed over time. I think you know, particularly in the Texas market, I would say post Winter Storm Uri, where there's so much volatility, the terms have gotten a little shorter. And I think part of
Mm.
that is
Mhm.
just on the retailer side or the supply side, folks have gotten more conservative of like, we don't know where the world's going. And so
Yeah.
people add in more of a premium for the longer terms, and as a result, it brings people to the more efficient transactions happen at the shorter time periods. That's more on the fixed price side of things. I think folks who are interested in that index variable rate, there's different things you can do, but in that case, there's less reason to lock in for long term because you can go to another provider for
Mhm.
an index rate if you know if you want to stay on that.
Yeah. Yeah. So on the Queasy side, if you guys, who do you work with typically? Do you have a kind of exclusive partner, or you guys can you work with any Queasy?
So as a load serving entity, a retailer, we are our own
Yeah.
Queasy.
Oh,
Um,
you're your own Queasy.
yeah, so we,
Okay.
we trade and we serve our
I'm
own load.
learning this stuff, man. I don't know all this stuff yet, so this is good.
Good, yeah. We don't actually do the demand response queasy. So if you are
Mm-hmm.
a customer that has a retailer and a demand response provider, there'll be two separate queasies that are associated with you as a resource. There'll be the kind of the retailer
Mm-hmm.
that has their own queasy supplier, and that we do, and then the demand and response provider will have their own queasy that is serving the demand response load, and you'll sort of be associated to. And that's part of the reason why it's helpful for the demand response provider and the retailer to coordinate, because there's some messiness of how the back office settlements
Mm-hmm.
work between those two queasies, and so if the two entities are talking to each other, it's a better outcome. But yeah,
Okay.
so
I'm feeling a little queasy talking about all these queasies.
yeah, it's a funny acronym. It's more colorful than the other markets. They're just like market participant or boring things. But
Yeah.
Texas got a good name. I
Queasy.
like it.
Well, and we skipped over something pretty important. We basically are always asking people how they got into what they're doing. How did you get into this AI generated kind of power market company that you're at? What's your backstory basically, and what's your, I guess, Bitcoin kind of relation or story? Are you a Bitcoiner? What got you into this? And then I'm going to want to know how much growth is coming from the Bitcoin segment versus some of your other, kind of customers.
Yeah. No, happy to dive into that. So yeah, my background, I come from the power generation space. So I was
Mhm.
interested in energy and energy markets, and I was involved in building some of the early grid scale battery storage systems with a startup called
Mhm.
Greensmith, which is now a battery storage group within a bigger European power generation company. And then more recently, I was leading grid scale battery storage project development as a developer at Shell. And while at Shell, kind of got exposed to a lot more of the trading, and that's where I met Gridmatic as a potential partner, and got more excited with what they were doing and decided to jump over. So most of the folks at our company come from like an AI technology background, but there are a number of folks that also come from the power space, and I fit in that latter bucket.
So are you orange pilled, or do we need to convert you right
No, so on the Bitcoin side of things, I would say at the company level, we don't necessarily have like a long-term thesis. We're, we just see the growth and the fact that it's in the market, and
Right.
so it's
Yep.
it's real from that perspective. The numbers are real for certainly. I think on the individual side, there are certainly folks at the company who are well involved. I do hold Bitcoin, but not in any amounts that would be of interest to anyone else.
Hey man, that's the kind of the thing though. Anyway, is everybody lost their Bitcoin in some boating accident. So, we don't want to tell anybody how much you got. You don't have to do that. It's all interesting, but yeah. So, what's the growth profile looked like for you guys from the mining side? Has it been kind of the biggest area of growth, or is it starting to morph more into some AI development?
Yeah, I mean, I would say it's among the bigger areas of growth. It's certainly the biggest area among the flexible load category. I mean, a lot of growth happens just from customers who are more traditional customers that need power and have different needs around the renewable attributes of the power or other services we can provide. But on the flexible load side, I mean, it's really Bitcoin is in the market right now. I mean, I think we were looking at some ERCOT reports for the Texas market. We look a lot at ERCOT, although we trade in the other markets as well. But ERCOT tends to be have a lot of transparency, which is nice. And they're saying that they have like 2.6 gigawatts of large flexible loads right now. I mean, and we think all of that or nearly all of that is Bitcoin, and that's curtailing on a regular basis.
Wow.
There's
Is
another
that how much they're saying is actually active right now?
Yeah, that's right.
Wow.
Like in the market, responding to price signals. There's other responsive loads as well that like curtail for these the peak periods, 4CP events. But in terms of what they would call large flexible loads, the ERCOT classification, they're at 2.6 gigawatts, and that's basically been all in the last 3 years.
Wow.
And so if you look at the total growth, total market size, I mean, usually the market's at around 50 gigawatts. It was 85 gigawatt peak, but I mean, this is already becoming a meaningful like resource category for reliability in the marketplace. And I mean, it was all installed in the last couple of years. It's growing rapidly, has a huge impact on the flexibility of the grid. And so, we're very excited by that.
Yeah. Well, and that's interesting to hear you say that, because that's still a topic that people debate is whether it's good for the grid or whether it's, bad for the grid and straining the grid. Typically, from the political world, you have sides that don't like to see that much power being used by Bitcoin for Bitcoin mining, and obviously California is oftentimes the state that people look at the most that are like, they're not proponents of Bitcoin mining out there most likely, but from your guys' kind of viewpoint, does the company have kind of, I don't know, any real-time knowledge or examples of kind of the mining industry and the reliability that it's created for the Texas grid? Is there a thought process over there about it?
Yeah, we are forecasting every day in the day ahead market, what the load is going to look like tomorrow, and it's been a volatile last year in power markets around the country, but especially in Texas, last summer there was a lot of heat, and we had this storm Heather came through, and so we have to evaluate this load that we're seeing. Do we think it's going to shut down, or do we think it's going to be flat? And so we have to evaluate that in our markets, in our models, and effectively what the models are showing us is that there's multiple gigawatts of load that's responsive, and it's consistently responsive, and it's responding at the times we would expect it to, which I mean effectively means it's serving a reliability function. That the margin for error is such that the grid needs all of these resources to be responding at the right times. There are other markets in the country where there's plenty of buffer between generation supply, just the way the build out has occurred, but that's not the case in ERCOT. It's we haven't had any blackouts in the past year, which is good, but the reserve margin is smaller than what operators would like, and so every gigawatt counts. And so whether that's a mining operation or peaking power plant, it's well needed on the grid at the moment.
Yeah.
Today is like a grid masterclass.
Yeah.
So we just
yeah,
recorded with Joe from Grid Beyond on the demand response side.
Right.
And so I'm just trying to I'm soaking up all of this and just comparing the notes on these two podcasts.
Yeah, because you guys do play kind of a different role. Like you guys are on the retail provider side, and they're a queasy that's basically helping people kind of maximize their demand response revenues and some of the ancillary stuff. But yeah, this is good to hear. And also, it is good to know. Like we say it all the time. We talk about what mining does for the grid, what it can do for like underserved areas, what it can do for renewable projects that are getting developed, and acting as kind of a buyer for this power that might not be able to reach the market. But it's good to hear, you guys kind of looking at it from a real time perspective and being able to kind of solidify that this is what's happening. I get asked a lot from different groups that like they want to be able to provide real time data to back up these claims. Like, some of the governments in the Middle East I've been talking to about using Bitcoin mining for grid stabilization and all that. And I've struggled sometimes being able to find data to back that up. There is some. Texas Blockchain Council has a lot that they put together. Do you guys have anything like that? Because I would love to start using it to shoot out to some of these folks and just kind of show like, look, this is the reality of like miners are shutting down during peak demand times, providing additional power to areas that need it. Do you guys have anything like that you share?
Yeah, I mean, I think
materials?
in terms of the miners that are sort of shutting down for the economic curtailment during peak periods, we've certainly observed it, and I'd have to go back to the team and find the analysis to be able to share it, but would be happy.
You don't have to give me anything proprietary, but man, I would love to get some public data you could share. That'd be great.
Well, and there's a second place to look also, which is that what we're starting to see and what we're really excited about is miners starting to participate in these ancillary services themselves, where they're providing the reserve services, the spinning reserve or non-spinning reserve that would be around during kind of emergency periods or unit trip periods, and you can see them in the market doing that, and that's actually one of the things that we're doing is helping to enable miners to participate in those services, because there is there's potential big financial opportunity, but there's also some risk in doing that, and we can help folks evaluate that.
So, do you guys deal with collateral issues from miners much, or is that kind of a different segment where someone else is going to deal with them providing collateral, or do you guys have to deal with that much with the miners?
Yeah, I mean, it's a everyday conversation, because when we're providing a power contract, there's always a credit component to that, where we're providing the services and the payment comes later. And so understanding how to collateral is a sensitive topic. No one wants to post more collateral than they have to, because there's a big cost of doing that. And so we look at strategies actively to try to minimize that, and that can include things like doing more frequent payments, so that there's sort of less money outstanding. It can include things like having some kind of limits on the operations, so that we know that curtailment's going to happen during high price periods, that kind of stuff, because you have to get creative to make something where everyone's going to be made whole in a case of crazy event.
We might have somebody for you to talk to. I'd be surprised if they haven't reached out to you, but if they have, do you know anybody at Sonoda? Have you heard of them?
I don't think we've been speaking to Sonoda, but we have a sales team that might have some folks that conversations that I'm not part of, but we should make the connection.
Well, we've had Austin on the show, so if you want to go and listen to that episode.
Yeah, you should listen to it. Austin
There's
Mitchell.
a lot of synergy between y'all two.
And they've got a way, they've came up with kind of a platform that allows you to settle daily in real time. And it's very, like, a lot of the utilities that they've met with are kind of excited about it, because it removes some of the risk for the utility or a rep or a retail provider like you guys. So because you are getting kind of daily settlements, you know what I mean? So that would be something. We'll shoot an email after this. We'll connect you with Austin. He's a good dude. you guys would like each other. Super smart, like way smarter than us. He's a guy you should talk to.
Great looking hair.
Yeah, he's got great hair. Yeah,
Goes a long way.
yeah. It does. Yeah. So there's a reason I wear a hat all the time. But yeah. So if I'm a miner and I'm like, there's so many options from the retail provider side, right? There's a lot. I say there's a lot. There's a handful. There's a variety of groups to pick from. But if I'm in Texas and I'm looking for who I'm going to buy power from, like, what's the sales pitch of why, like, I should go to you guys?
Yeah, I mean, I think it really is tailored to the type of offering you're looking for. So, if you want price stability, we'll focus on what we can offer there. If you want, maximum savings, we'll focus the offer there. But it's really taking advantage of the forecasting and AI-based optimization in order to give that to you. So I'll give you an example. We work with customers who are, want to be on index rates where they have a certain threshold that if the real-time price hits a certain dollar amount, they're just going to curtail, and they want to have that flexibility to do that on their own terms based on market conditions and anything else that's changing with their operations. And they are interested in participating in these ancillary service markets to get additional revenue. The challenge with that is that, so an ancillary service market example of that is the non-spinning reserve market. And that market, you bid in the day ahead market, so a day ahead of when you're going to provide the service, in these hourly blocks. And it says, I'm going to be, operating for 100 megawatts, and you can call on me, grid operator, if you need to, and I'll curtail during that period as your reserves. And normally that works out great because you get additional money for doing that. And, during those calls, the prices are going to be high because they're during kind of emergency periods. So you're happy to curtail during those periods. Problem is, prices are also high during other periods that aren't considered emergency periods. There could just be tight grid conditions where the prices are expensive because their expensive generators have turned on, but it's not an emergency. And so if you commit to that ancillary service in the day-ahead market, you might be in a position where you have to be operating at 100 megawatts so the grid operator can call you. Prices spike, you're not able to curtail now because you're committed. Yeah. And so what we can do is we can offer you that real-time index rate. And then we can also partner with a demand response provider where we're the ones providing the forecasts and the optimization of how you bid into that day ahead market so that you're getting the revenue from the ancillary service when you want it, but you're not getting caught, with price spikes that you can't get out of when you need to. And we've done a lot of analysis on this with our forecasting. And what we found is that in the non-spinning reserve market, for instance, with imperfect knowledge, we can save something like 10 to 15% of the overall energy cost. And that includes, getting it wrong sometimes. And there's this other market product in Texas called ECRS, which has a faster response time. And in that one, it's been super valuable the past year, where if you were in that market, based on forecasts we have available to us, you could have had a power bill that was close to zero when you take away that ECRS revenue. Wow. So it's a huge potential savings. Now, it was a new market product this year, and I think part of that was what contributed to the very high prices that we saw. So that may not last, but even if it's 20% savings, it's a real moves the needle in terms of the overall power bills, and that's what we're trying to enable for customers.
Yeah. What data is the AI? I mean, this might be a proprietary deal too, but like, what are they pulling that information from? Like, Weather Channel, or like, you know what I mean? I'm trying to figure out how that works.
What's the secret sauce without telling
us?
What's the secret sauce?
I mean, like the secret sauce really for all of these AI applications is pull as much data as you can from as many different places, and then build a really advanced platform that allows you to use the right parts of the data. And that's really the hard part, is building this big infrastructure, this software infrastructure that can keep ingesting more and more data and knows how to do that the right way. So we pull data, like weather data. We use, there's weather models that are run by governments. So there's the NAM, the North American model, in the US. There's a Euro model. It's run by European consortium. And so, there's huge amounts of data in all of those weather models. And, you don't need all of it, but you have to know what you have to ingest it in order to get the right stuff. And that's really where the secret sauce is. It's building models and building infrastructure that manage all that data pipeline.
You got a bunch of Jim Cantori videos in that database, I bet. But yeah, that's interesting. Jake he's an AI guru over here.
Poquito.
That's where it starts.
You-
What are you working
yeah.
on, Jake?
Well, as a company, we've essentially built. Long story short, this has nothing to do with Bitcoin whatsoever, but digital wallet
That's
headers.
not true. That's
Kind
not
of zoom
true.
out,
And
zoom out. We built a platform called Collide, which is essentially like we're unbundling the energy vertical on LinkedIn and giving them a place to live. So think Reddit is a forum. We have a jobs marketplace, and then we've also built a product called Collide Pro, which started off as the ability to query for all of these podcasts and all of our events and the stuff that we recorded. We used AI to watch it and transcribe it for like video content in particular, right? So not only could you search for spoken words, but like if I was to search for your name and it pops up on the screen, well, guess what? Now your name is also indexed. Or if there's a presentation, all of that data is also indexed. And we took this to market and people were like, yeah, this is pretty cool. Can we prompt it? And so we're like, oh, all right, let's see what we can come up with. So we, rather than building and training our own model, we essentially took a RAG approach where we have this middleware optimization engine to where we're constantly optimizing between all of the most popular open source models so that an engineer, like an oil and gas engineer, whoever, if they're looking for answers to a question, they can ask it. And our guarantee is that we'll give you the best possible answer that AI can give you today.
Cool.
And we don't tether ourselves to a single model. And so therefore, because there's a new model coming out every single week, right? And then we're not training it, we're not taking on that cost. That's a huge part of our business. We're energy guys kind of first and foremost. Super exciting.
Yeah.
Really at the forefront of what's happening in the space.
The entire AI space to me is just remarkable. I could have never imagined the stuff when I was in high school. I'm a lot older than y'all.
I didn't think it was going to get here as quickly as it did.
Yeah, no, it feels like it's just happened overnight to me. It's remarkable. But I mean, I can definitely see the value in like what you guys do and how that can benefit and fit with miners a lot. I mean, not even just on the, I guess, like software side, but like we're seeing the ties between like Bitcoin mining and AI even in operations, right? A lot of the stuff that we do from the Bitcoin side of things is very energy intensive and large scale, high energy use operations. And, where I'm at now too, I mentioned this on the last show, we're doing like a marathon right now, but a lot of the projects that we're doing, they not only fit the Bitcoin model, they fit the AI model from a data center standpoint. So, these two industries are very intertwined. So it's nice to see you guys using AI to basically take advantage of the power markets and service Bitcoin providers. So it's interesting. Do you guys have like a platform that you can get on and kind of test out that might help people understand here? I had not heard of you guys, just to be honest. I had not heard of you guys. So just from a standpoint of like, look, you should go talk to these guys and kind of see what your, I guess, services look like. Is there something we could go to? I mean, you got a website that we could go on. Is there any type of platform demonstration or anything?
Yeah. So, I mean, we have a website you can go to, but the platform is really it's configured for users. So we run back tests for folks. We'll do simulations with folks. We can show them how the platform looks and what the results of kind of the trading performance would look like over time. But that's something that we'll set up for customers and we engage with them on a kind of project by project basis. So it's not really a self-service thing at this stage, although that might be an interesting expansion for us. But there definitely is a platform, where you get a login and you can look at your project and how it performed, and then in the operations, likewise, you can track the ongoing activity.
Yeah, that's what I'm curious about. Is can they go in and manipulate kind of their targets of like, this is our threshold for this is our threshold for that, or do they go through you guys for that?
It's usually through us because the kind of, well, I mean, there are setups where the customer is totally in control of all those things, so that's not an issue. But the configuration is done through us typically, and then we'll analyze it in a backtest environment, and then provide that information to customer to help them with the decision making process. But yeah, I mean, I think that's something that we're definitely open to, of kind of exposing more knobs like that to customers.
Yeah. And you mentioned it earlier, I think, but so you're in ERCOT. obviously in Texas. Are you guys in like PJM as well?
So we're a trader in PJM. So we are a PJM market participant. We're trading every day in the market. We're not currently licensed as a retailer, although we expect to be sort of have those licenses in place later this year.
Nice,
Yeah.
nice. Yeah, that'd be good. There's a lot of growth up there, and I asked the last guy on the show too. Are you seeing much growth in Texas? Has it kind of stagnated out in West Texas? Is it growing anywhere else faster, like South Zone in particular?
I mean, I would say we still, most of the inquiries we get are West Texas, and after that, it's actually in the North Zone.
Oh, really?
I mean, we're
Okay.
definitely seeing stuff in the South Zone, but I think that's been just fewer. I think North, even though in some cases prices can be higher, there's just more infrastructure, and so there may be more opportunities for build locations.
Yeah, yeah, yeah. I think there's probably more wind up there for sure, and
And a lot of solar is
from
coming
behind
in that
Yeah.
area. So yeah, I think you are seeing spread beyond West, but that continues to be the driver. I mean, that's where most of the activity is.
Yeah, yeah, yeah. Well, like it's interesting stuff. It's crazy to me. AI is touching everything right now.
I think this kind of just speaks to with this and then with Gridbeyond as well. It's just like the maturation of the space.
Yeah, yeah.
Yeah.
I mean, yeah. We see the industry grow so much all the time, and just the maturity of not only the people involved. Hopefully, we've matured some too, but just looking at things becoming more institutional, right? And that comes with capital dollars pouring into it, and the bigger dollars, the bigger boys come into play, and things just get more institutional over time. Naturally, I think as success comes. But yeah, like, are you guys like private equity backed, or was it bootstrapped, or like what was the? I know your guy was kind of in the back at the pool house, putting everything together. But what kind of catapulted you guys to the growth that you're seeing now?
Yeah, I mean, it's a true bootstrap story. So
Really?
Matt put his money in. He raised a small kind of seed round from kind of friends and Google VPs, and that was.
He had a nice little network to run with already.
I mean, yeah, there are some benefits to being in Silicon Valley, I guess, but it was a small amount of capital, it was a couple $1 million, and from there we've just grown based on trading profits, and we've taken in outside capital for funds that we operate. So on the trading side we have a fund, on the storage side we have a fund. This is kind of the trading activities of both these groups, but that's all kind of fund level. So at the kind of corporate parent company level, we're a large participant in these funds, and then we have we've just been profitable from very early days.
From the storage side, we didn't really talk about that much. What are you guys doing on that side? Like, are you guys actually handling batteries, or what are you?
Yeah, so we operate batteries in the market today. We have, it's basically two models. One model is, you're a battery owner and you want someone to help you bid that battery and optimize that battery in the market. And batteries are so complicated. I mean, it's hard for a person to operate one of them very well, and machines do it better. But it's, you move beyond that, and it's just like it's insanely complicated. And so we're seeing, that's really the direction that the industry is moving, is to have these kind of third-party optimizers who are in control of batteries. And so that's the one thing that we're doing for people who own batteries. And then we're also, I mentioned we have a fund of capital. We're an off-taker for battery services. So we will give folks, we'll toll batteries. So effectively that's providing a lease to a battery owner. And then we can trade that battery on our behalf. And that's helpful for us because we have this load book that we need to manage. And then we also have this fund of investors where, if we make more money from the batteries, that's good for them. And they're willing to post the capital that we need to post to when we have to post the collateral as the off-taker for these battery contracts. So we do both those things.
Dumb question time. What role do batteries play in all of this, kind of from a macro standpoint?
I mean, in terms
That's
of,
not dumb. I was curious too.
Yeah, I mean, in terms of,
because this doesn't come up. This is like the first time that I'm kind of hearing about batteries playing a kind of a critical role in balancing the grid. So like, how does all of that work from a high level?
Yeah, I mean, it's really interesting. I mean, I would say like the trajectory of batteries, at least in Texas, looks it's quite similar to the trajectory of the Bitcoin miners. If we have, let's say we have 2.6 gigawatts of Bitcoin mining on Texas that's curtailing during peak periods, we have like 5 gigawatts of batteries that are now in the market, and it's been the same time period. It's basically the past 3 years that all that has come in. So there's just this rush of these new flexible resources, and I think the batteries are playing a big need. They're providing these reserve services that can alternatively be provided by load resources, and they're also shifting energy from the peak periods to off peak. So they're discharging at the same time as the Bitcoin miners are curtailing, and effectively they're providing similar services, and it's a little different, right? There's not a complete overlap, and they have different incentives. But they're also this very much needed flexible resource. Because I mean, what's happening is as you have more wind and solar come to the grid, you can still have gas power plants that are flexible, but the economics on all the inflexible stuff like the coal plants just tanks because they can't turn on and off all the time. So they're retiring. Some of the gas plants that are less flexible are retiring, and you need something to fill that gap, and that's really coming from, we think, from batteries and from flexible loads.
So I'm going to be devil's advocate here on the battery stuff, just because, and I admittedly don't know a ton about it, but from an operational standpoint, how far are we away from them being more reliable on kind of length of time that you can actually run them? You say you got a 100 megawatt site and you got a 100 megawatt battery. You really only be able to run those for like an hour at full 100 megawatts. Is that accurate? Something around that?
Yeah, I mean, it ranges on the particular battery. So we see batteries in the market in the 1 hour range. There's a lot of 4 hour batteries in California. There are some batteries that are longer than that, but that's the typical range. That's really driven by economics, not by technology. I mean, you could keep stacking lithium-ion batteries on end. It's not cost effective to do that because the value that they're creating comes from cycling frequently. And so you have a big battery, it can't cycle as frequently and kind of amortize the cost of all those batteries. So the use case that they're providing is really the kind of the short-term second by second fluctuations, as well as the reserve services on the minutes to hours, and then that daily like load shift. So they pair really well with solar, where you charge them during the day and discharge them in the evening when the sun goes down. That works really well. For the longer duration stuff, multiple days, kind of grid emergency from a storm. Yeah, I mean they're not really built for that, and so we'll need other technologies like flexible loads, like Bitcoin miners. Maybe there'll be green hydrogen. We'll see. Maybe there'll be other battery technologies that come to the market to play that kind of longer duration reserve service. It's not really, that's not a problem that I think anyone expects lithium-ion batteries to be solving.
Okay, that's what I didn't. Is there any plans? Is that eventually the operational goal? But it doesn't sound like it, to actually have batteries that are basically performing the same role that a Bitcoin miner is. Now, obviously, you're naturally going to be limited. It is a battery still, but that's what I was curious about. Is do people see this as a long-term solution to flexible load stuff? Because obviously, it's storing energy, not using energy. And from a ESG perspective, in some circles, that would be a benefit. But is that not kind of the ultimate goal of battery storage? It's more of a kind of, as you described, more of a limited purpose for kind of like solar programs and things like that.
Well, I mean, I think there are folks, working on all kinds of things, and there are different technologies that are not lithium-ion that are focused on, say, 100 hours of storage or other things that are much cheaper. It's not out there yet, right? And so the question is, is that technically possible, and can it scale? And I think these are not really answered questions. So, I mean, there definitely are people in that space that are going after that longer duration market. And certainly when you think about kind of like all the electric vehicles, if they could all be organized as a fleet, there's certainly a lot of battery capacity, cumulatively across all these vehicles that potentially could be harnessed for something long duration like that. But the coordination and the infrastructure to do that doesn't exist at this stage. And so, yeah, I think the short answer is that people are working on it, but it's not available today, and it's not exactly clear what the winner would be of the different folks working on that.
Well, shoot, man, we need to get you guys. They should come to Fuse.
Fuses not happening anymore.
Oh man, I should have came to Fuse.
There was a special moment in time. It
Yeah.
only happened 2 years.
You definitely should come to Empower though. If you guys should have a presence there for. Because I'll be honest, I hadn't heard of you guys, but I think there's obviously
A huge opportunity.
Yeah,
Massive
right.
opportunity for you
Right.
guys.
Yeah, well, we gotta do a better job putting the word out. So whatever you guys think are the best places to be, let me know.
it's
Well,
Empower.
Number one was here. Second is Empower. So you're doing the right things.
Yeah, we think it's perfect. So, it's end of March, so it's not too late.
Man, David, this has been great. I feel pretty dumb over the last 2 podcasts because I'm just like, as an oil and gas guy, like I can speak that till I'm blue in the face and get pretty technical for somebody who's not an engineer. But man, when it comes to just energy in general and just like the grid and stuff, like I'm a student right now. I'm trying to soak it all up, and so.
Hey, if we're not all students, what are we doing?
Yeah, no, that's true. But it's a complicated area, and most people don't know anything about it. And that's why when we hear politicians talking a lot, it's like people need to get educated on the reality of in this situation what Bitcoin mining can do for the grid. And yeah, we're getting out some more. That's why I kind of wanted some of this educational materials, not only for my own benefit to go, just try to sell more deals to people, but because it's good for people to kind of get around narratives that are thrown out there, because there is a lot of benefits for the grid, which obviously is beneficial for people around the state, and it helps kind of keep our folks safe in case we get any bad storms again coming through. So thank you for coming, and thank you for being on the show. Sorry we were a little late too. That was my bad. I needed to go grab an energy drink.
Nah, it's okay. We had technical difficulties anyways. But
Yeah.
David, this has been awesome. I hope you guys that are watching it, I hope you enjoy the fact that we're recording 1 million episodes for you, because we took a little bit of, blame it on Justin. He's moving, all sorts of stuff. We took a little bit of a hiatus, but we are back in full force. We're dropping more episodes than you guys know what to do with. So, David, thanks again for joining us. This is a great conversation. Looking forward to doing it in the future.
Justin, Jake, thanks for having me.